Good day, I'm Robert Chase, and these are today's top stories from PulseNews, Miami Money, and Markets on PulseNews. Miami mortgage broker Bennett is shedding light on crucial financing options. He explains how foreign nationals can purchase Florida real estate. This is possible without a U.S. credit history. This insight comes at a pivotal time for the state's property market. Florida has long been a magnet for international investors. However, obtaining traditional U.S. mortgages often presents a significant hurdle. Lenders typically demand a robust American credit profile. Bennett's strategies offer an alternative path for these global buyers. He details methods where foreign nationals can use their overseas financial standing. This includes proof of income from their home country. Bank statements and asset verification are also key. Some programs even consider international credit reports. This approach bypasses conventional U.S. credit checks entirely. The impact of these revelations is substantial. It significantly expands the pool of potential buyers for Florida properties. This simplifies the investment process for individuals across the globe. It particularly benefits the luxury market and vacation home segments. The possible consequences are clear. Increased foreign capital will inject greater liquidity into the Florida real estate sector. This could further stimulate market growth. It solidifies Florida's position as a premier global investment hub. Property values may see continued upward pressure. It ensures sustained interest from overseas investors. This secures economic benefits for the region. Now to our next story. What it takes to be middle class in Miami, other Florida cities. A recent USA Today report sheds light on the escalating financial requirements for middle-class status in Miami and across Florida. Families now face significantly higher income thresholds to qualify. This directly impacts millions of residents striving for economic stability. Traditionally, middle-class status provided a secure financial footing. This often meant owning a home, saving for retirement, and affording quality education. However, relentless inflation and soaring housing costs have redefined these benchmarks across Florida. Miami, in particular, showcases extreme shifts. For a typical family of four in Miami, achieving middle-class income now demands substantially more annual earnings than just a few years ago. Report figures suggest this range could begin well over $100,000 annually for a household, often requiring dual incomes. This dramatic shift creates immense pressure on household budgets. Many find themselves earning more yet feeling poorer. Disposable income shrinks significantly, impacting savings and investments for the future. Businesses reliant on consumer spending could see significantly reduced activity. The long-term consequences are significant. We could see a pronounced demographic shift. Young professionals and skilled workers may seek more affordable regions, impacting Miami's talent pool. This strains local economies and civic services. The city risks losing its diverse middle stratum. This segment is crucial for a healthy, dynamic urban environment. Maintaining Miami's economic vibrancy requires addressing this affordability crisis directly. Policymakers, community leaders, and employers face urgent calls to find sustainable solutions. Now to our next story. U.S. and Iran reach deal to extend ceasefire and open strait. The United States and Iran reached a significant agreement today. They will extend the current ceasefire. The deal also reopens the vital Strait of Hormuz. This landmark pact aims to end their ongoing conflict. Both U.S. and Iranian governments confirmed the framework details. President Trump publicly celebrated the deal. Some analysts, however, express strong caution. They view the agreement as American capitulation. Its true test will be sustained implementation. The Strait of Hormuz is critical for global oil shipments and trade. Its prior closure caused significant market instability. Reopening the strait should stabilize energy prices. This will ease global supply chain concerns. International shipping will resume normal operations. Decades of animosity define the conflict's background. Recent hostilities severely impacted global trade. This deal seeks permanent de-escalation of tensions. Economic consequences for global markets are paramount. Oil prices may see downward pressure. Shipping costs for international goods could decrease. However, skepticism remains regarding long-term peace. The agreement faces intense scrutiny globally. Its success hinges on mutual adherence. Any renewed aggression could quickly unravel this fragile peace. Businesses in the region face continued uncertainty. Financial implications for international trade are substantial. The world watches closely for lasting stability. Now to our next story. Trump heads to G7 summit with wind at his back after announcing agreement aimed at ending Iran war. President Trump departs today for the G7 summit in France. His departure follows a significant announcement. The White House declared an agreement aimed at ending the ongoing war in Iran. This news offers President Trump a strong position entering the summit. He arrives with perceived diplomatic momentum. However, the agreement also generates considerable questions. Global allies are scrutinizing the details. Many G7 leaders are already reassessing their relationship with the United States. The U.S.-led conflict in Iran has been a dominant global concern. Its resolution carries immense geopolitical weight. This new agreement is expected to be the central topic of discussion. It will overshadow other planned agenda items. The G7 summit brings together leaders from major global economies. These include Canada, France, Germany, Italy, Japan, the United Kingdom, and the United States. President Trump's past interactions with these leaders have often been contentious. His track record includes public disagreements and awkward moments. This history adds a layer of complexity to the current summit. Allies are keen to understand the specifics of the Iran deal. They seek clarity on its long-term implications. Economically, the resolution of the Iran conflict could impact oil markets. It could also influence regional stability and investment. Pulse News Miami Money and Markets will continue to monitor these developments. The agreement's validity and global acceptance remain crucial. Its details could reshape international trade flows. Major financial decisions hinge on this diplomatic outcome. Now to our next story. Britain announces social media ban for children. Britain has announced a sweeping social media ban for children under 16. Prime Minister Rishi Sunak's government unveiled this landmark legislation today. The move aims to protect children's mental health and curb online addiction. The government emphasizes restoring a childhood free from relentless digital pressures. This ban reflects escalating global concerns. Many parents, educators, and mental health advocates have urged stricter regulations. Background research highlights detrimental effects of excessive screen time and exposure to harmful online content. The policy targets a healthier developmental environment for youth. The immediate impact is substantial. Children under 16 will no longer legally access major social media platforms. This promises reduced cyberbullying and potentially improved academic focus and social interaction. Parents face new enforcement challenges but anticipate significant benefits for family well-being. For social media giants, this signals a major financial hit to their bottom lines. They will lose a significant user demographic and associated advertising revenue. The legislation mandates robust age verification systems, a costly and complex undertaking across all platforms. Non-compliance carries severe financial penalties. Investors are closely monitoring tech stock reactions. This action establishes a powerful global precedent. Other European nations and even the United States may explore parallel measures. Companies face immediate revenue reductions and long-term strategic reevaluations in their target markets. Market analysts predict a surge in demand for sophisticated age verification technologies, creating a new niche. That's all for now from Pulse News Miami Money and Markets. I'm Robert Chase. Subscribe to Pulse News so you never miss a story.